Hi everyone, hope you're all doing well, and here we go with a weekend video. So today I'm going to be sharing with you a stock that I might be buying. So it's not always seen on the YouTube side of it, but I am continuously, when I've filmed videos and got that done, I'm normally researching companies to be invested in. I'm normally researching a lot of companies a week, and sometimes, well, a lot of the time, you guys will never actually see the companies that I've been researching and my notes on them and why potentially I do like them or I don't like them or what price I could potentially buy them at. And I thought today I've been doing quite a lot of research into this company, so I thought I'd share that out with you guys, because obviously some of you guys might be interested in this one, or it might be an opportunity that you guys like and do some research in yourself, and just share like this information that I've done looking into this company and why I think it's a good opportunity. And you guys know that normally when I title these videos I might buy this stock, I would say there's a good 50% chance that I do go on to buy this one. So this stock that I might buy is more, the reason why I haven't bought it at the moment is I want to see the turnaround happen a bit more. That's why I've held off buying it at the moment, and this as what is kind of given there, I'm looking at this one as a bit of a turnaround play. So I'm looking into a company that has been struggling financially recently, but financially could then move back into a positive place. I think that potentially could offer some share price appreciation, as well as getting some share price appreciation from executing on a turnaround play. I'm also thinking I'm going to be picking up a very good dividend stock here with a very high yield, and that's what I'm looking at. So originally I got this stock actually from the Patreon. We actually do this series which is called a stock request, and we have a tab on the Discord where members on the Discord, which if you want to join, the link is in the description, they can put through stocks for me to have a look at, and we're actually going to do another one this weekend. But at the time there was 3 stocks that went through: Alpha Wave, which funny enough I actually went on to buy that one as well, Wix, and this stock which is Walgreens, which we're actually talking about today. And it actually one that I've always wanted to look at, because I thought this could be an opportunity here, and they're turning things around. And that was the first point where I actually started looking into that company and going, oh, this is actually really interesting. And the other really interesting point is that a YouTuber that I massively respect, and in fact I think he's probably one of, if not the best YouTuber out there, is Ali's World of Stocks. And in the recent March edition, he actually posted the exact same theory that I had on this company, and that he was actively buying it. And when you have great respect for someone and they basically come to the same conclusion as you, you're like, well, that's a really positive sign as well, which I think was really good. So we'll get stuck onto this. So the stock is Walgreens. It recently had a dip into the $33, which is actually where this range here is actually where I think is a good buy. I thought if we can actually get into the $20 range, that is a really good opportunity, and obviously that will increase the dividend yield. But this is where I think it's coming a really increasing opportunity. 28 billion market cap, 5.77% dividend yield. So obviously when you look at the average, S&P return of 8-9% a year, you're getting a good chunk of that through the dividend yield if they can sustain that, and then you factor in what I think potentially could be a turnaround in the share price. Obviously that can be really interesting as well. And most of you guys will know Walgreens, the pharmacy company, and you can really see the share price hasn't done well since 2015, and particularly in 2018. That was where the major decline has happened in the share price in Walgreens. So why has this had such a big share decline? What is kind of going on here? Well, Walgreens itself has come a bit stagnant. It hasn't really been improving the business, and with rising costs, with wage increases, stagnant business, poor leadership and competition as well, the likes of Amazon moving into this space, it's really compressed Walgreens sales and their margins. And it's very clear, especially when you look at the past growth on the profit side of it from about 2018. You can see here the company was putting around about 4 billion in profit, and you can see by the time we got to 2020 that had all dropped down to 3.6 billion, and the profit margins had declined as well. And in fact in 2020 obviously topped with the CV situation, that didn't help. Now recently there has been a little bit of surge in profit. That's due to the CV vaccines that they're doing, and the people coming in potentially buying something when they're coming for the CV vaccines. And that kind of gave them a little bit of a boom, but obviously that's not going to be sustainable forever. And that is starting to wear off the business now, and the revenue is declining, the profit is declining. But there is some restructuring costs that are kind of going on in there, which we'll look at in a second. So you can see here, really the big management and the business hasn't been in a good place, and that's really been reflected on the share price. However, what has happened now is we have had a management change, and the company is now looking to move in direction and get back to points where it's growing its profit and revenue. So it's doing that by restructuring its balance sheet and selling off some parts of the business to try and strengthen up the balance sheet a little bit. And this new CEO came in. So there was a new CEO that came from Starbucks, and this was in 2021. And since then, there has been a clearer direction where Walgreens is looking to move into. So there has been a restructuring inside the company, and that is obviously cutting jobs, locations, parts of the business that aren't working out. And that's the first thing, managing the costs at the moment. And it's very clear as well when you look at the employees that are going on inside the business, the employees have been coming down as well. So there's a lot of cost cutting at the moment that's going inside the business. So that's the first thing, being more efficient. The second thing is improving the pickup. So the great thing about Walgreens is there's loads of locations everywhere, and a lot of people live very close to a Walgreens location. So if you can potentially order something and pick it straight away, or as well as that delivery, if you can get it delivered, say, faster than what the competition has been, something like an Amazon, for example, it's more convenient. So you've got very easy pickup, or you've got very quick delivery, and that's challenging the competition that's out there, and that is also helping them. So you've got more efficient, you've got more faster delivery, faster service, greater service. That's what we want when you've got a rising competition. And there's also a pivot inside the business. So the pharmacy business has kind of reached its potential, but Walgreens are going after one of the biggest areas, or one of the biggest issues at the moment in America, and that is to have primary care or clinic care as well. And they have been investing heavy into this space. They have been buying companies like VillageMD, and this is going to be a big driver for them going forward. So you can see here, this is a Walgreens. You got the Walgreens, the pharmacy in here, but on the other side of it, you got the Village Medical. So for example, you could be going to the clinic, say if you're going to the hospital, you go see a doctor that is in here, and then when you go see the doctor, potentially they say, you need to go get this to help you, and how convenient it is that you got Walgreens next door, then you go into Walgreens. So it ties in an easier access, a cheaper access, and then follows up with tying that with the potential pharmacy that Walgreens have. And this combination here, I think, can be a really good opportunity for Walgreens to be expanding into at the moment. So this looks very good going forward when you tie these ones together. Now, obviously, the thing with Walgreens is that we want to see them carry on now driving profitability and move into revenue growth. And if you look at the recent earnings from Walgreens, they did have a beat, they did have a revenue beat as well, although the revenue is currently declining at the moment, which we do need to see move into a positive direction. This is where we need this to grow 3-4% a year. But what they did is they actually maintained their EPS guidance, but also raised their sales guidance as well, which is what we want to see. And you can see here this US healthcare that they're looking at. You can see that they set a target from 14.5 billion to 16 billion from 11 billion to 12 billion. So this is where we want to see the growth coming forward, and we want to see that translate into the financials. Now, this is quite obviously all their earnings, and we do actually, I believe it is in 2 weeks, we get an update from Walgreens. So that's another key one that I'll be looking at. Like I said, I want to see the improvement carry on here with Walgreens, and if that happens, that's where I'll be a lot more happier to invest into this company. So we want to see that happening more and more. And you can see here, year-over-year growth from its healthcare segment was 38%, and that was from the VillageMD, and it also grew 48% thanks to its clinic growth. This is the area that we want to see driving the company forward in the future, and obviously driving up profitability. So we want to start seeing the company move back into profitability. which is forecast to start happening in 2024, and potentially then we see that continue, and then that dividend can be, sustained and move into a better direction where potentially they hike up the dividend. And also we want to see that revenue growth start happening. Now obviously at the moment they are expecting 2% year-over-year growth this year, and then if they can move what is expected in 2024, 5% revenue growth. So I would like to see this grow 3-4%. So if it's even above that, that's where it gets interesting. And you can see here that the estimate is for the EPS to go from $5.04 to $4.51, but then start moving into a positive direction as well. So this is what we want to see. We want to see if they can turn around and start increasing that EPS. They start moving the revenue, which is what they've been struggling to do. And a lot of this is driven from that acquisition into the clinic area. And then when you look at that, well, if they're starting to grow profit, if they're starting to grow revenue, then people are going to be more interested back into buying into Walgreens stock. And it comes more of attractive valuation, which at the moment it isn't a terrible valuation. As you can see here, it trades at a total enterprise value to revenue of a 0.4. It trades at total enterprise value to EBITDA of a 10. On a normalized earnings, it's around about a 7. So you can see here, it is really valued as a stock that is struggling. So if we see them start moving into a positive direction, obviously then you can expect the company to trade at a bit of a premium, and you should see that share price return. And as well as having that share price return, you've got to remember that the dividend yield is around 5, nearly 6%. So you factor in, if you can have a company that has a share price appreciation move back into the $50, $60 range, and then you're also collecting a really nice dividend yield, and then potentially that dividend yield can be hiked up if the profit is growing, if the revenue is growing. This is where it becomes a really attractive dividend turnaround play that you could potentially pick up. So yeah, you can see here there is the green shoot starting to come out from this business, where it's a bit more you can see a turnaround play starting to develop. The big thing that, like I said, this is why it's a stock I might buy, and I have to assess it how it does over the next few months, and the next earnings will help when we get them in 2 weeks. I can see if that turnaround play is still executing, and that will give me the more confidence to buy if I can see it's developing into the financials. So this is one that I've got at the moment, a value that I like. It looks like the turnaround play is looking good. The only thing that I have to see if it executes is on the turnaround play, and then I can potentially buy some shares. But at the moment, it looks like they are doing that, but we've got to see it develop a little bit more than this, and it wasn't just a 1 quarter of moving into a positive direction. So yeah, hope you enjoyed me sharing this information with you, and potentially you might be interested in this as a bit of a turnaround play, a bit of a dividend play. So let me know what you think in the comment section. But yeah, thanks for watching, and catch you in a bit.